With Twitter, you have to be really short and assume that everybody's going to argue with every point. So you have to try and be ultra clear. And if it is a point where it's not a certainty, it's a probability, you have to state it, because people are d***s.
Hey guys, welcome back to the channel. Today we have Raoul giving us a market prediction for Bitcoin and how the crypto landscape is looking for the rest of the year. Bitcoin is the world's most valuable cryptocurrency by market cap, and it has easily outperformed all other assets over the last decade. The 17 best performing asset classes from 2011 and 2021 were tracked last year, and Bitcoin handily topped the list with 230% annualized return. The Nasdaq index came in second on the list with a 20% annualized return. Raoul says that if Bitcoin prices have fallen to a 2-month low versus the US dollar, 46% of Bitcoin owners are still profiting. As spectacular as crypto assets' performance has been over the last 10 years, there are many hints that the following decade will be even more profitable. Let's check out this interview with Raoul. Don't forget to like and subscribe if you like what we do here on this channel. Let's get right into the video.
The world has never been more indebted in its entire history as a percent of global GDP. The US is the largest indebted nation as a percent of world GDP in all recorded history. The entire system runs on US dollars, and everybody's borrowed them. So you've got this, you've heard this dollar milkshake theory that gets floated around by Brent Johnson. It's basically also aligns with my theory that the dollar is structurally a problem now because there's too much dollar debt. And so there's always these claims on dollars that drives the dollar higher over time. And particularly in times like this, where there's uncertainty or you take a debtor out of the economy, you're kind of, it's musical chairs, you're taking some of the chairs out, and what happens is the dollar rises. So it's become increasingly difficult for the global economy to operate because its business cycle is now so tied to that of the dollar. The dollar, and I say this all the time, is the big daddy of all asset classes. It drives everything. So the world is now beholden. So if you are a South African exporter and you're exporting to China, you're actually beholden to the dollar cycle, which is out of your control. So people are starting to think, and this has been floated for a long time now, is how do we get around this? You know, can we use SDRs? Didn't really take off. We're starting to see central bank digital currencies, because there's another thing that comes with that dollar hegemony and the reserve currency is they own the rails, which is the SWIFT payment system essentially. So people don't want to be threatened, and we've just seen that be accelerated just now with Russia. They don't want to be threatened with not being able to send money around the world. Why should that be the US's choice? Well, it is because that's the reserve currency status benefit that they have, the exorbitant privilege that they own. Over time, we've heard nations talk about this, that they can't deal with it, and what they want to do is move to some sort of potential basket. So you could go to a world where commodity exporters have a basket of trading nation currencies that are weighted in kind of trade weighting. That would be a much more stable way, and it would make their economies much less cyclical. You know, it's unfair that the Brazilian economy gets destroyed every few years by the strengthening dollar. That has been underway, and then as new players have come into to challenge at the margin the US hegemony, China being the key one and Russia being the antagonist that's kind of moved around, those have forced others to consider a move away from dollars over time.
Retail investors were the driving force behind this movement during the last decade. However, sovereign wealth funds, global financial institutions, businesses, pension offices, governments, and other institutional investors are becoming more aware of the crypto market's potential. The Real Vision founder and CEO Raoul discusses his projection for the next phase of Bitcoin adoption. Powell estimates that Bitcoin will have expanded to a $50 trillion asset class in 10 years, with each of the 21 million coins worth more than $2 million.
And a lot of people look at this and say this is a dollar collapse. Oh my God, the dollar's going to collapse. I think it's the opposite. And I agree with Brent Johnson again. The dollar dies of strength and not of weakness. Because there's so many claims on the US dollars that if you block the Chinese out of the system, for example, I mean, the dollar's going to the moon. You've got, you know, huge changes that come. So it is happening. but it's happening on a geopolitical time horizon and not a market's time horizon. The market's time horizon is the dollar has a tendency to go higher, and the Federal Reserve keep trying to dampen it down by injecting swap lines to increase liquidity. Because you keep hearing this word liquidity more and more and more. That's the issue with the dollar, is people don't have enough liquidity to service their debts or their obligations of certain types. And that's an issue with a bankrupt European banking system that uses the Eurodollar system as its main lending platform. Same with the Japanese banks, same with the South Korean banks. So these are big entities, and the Chinese corporates, they're all dollar borrowers. That's the big problem here. So you've got not enough dollars in your banking system, and the banks need dollars to pay obligations, let's say, or the corporations need dollars. So what happens is you start a liquidity crisis. And we've seen it many times. European banks start plummeting. You see the credit markets getting nervous about stuff, and the dollar starts screaming higher. So the Federal Reserve comes in and basically temporarily lends you money to pay your credit card bill. That's what the swap lines are. The US was already moving in that direction, and there's a fantastic book to read. This is How They Tell You the World May End, which is about cybercrime. And you realize how big an issue state cyber warfare is, and how protective you have to be over your supply chains, because in a digital world they can be hacked. So we've got hacking of undersea cables going on by Russians. We've got the listening in on every business by the Chinese. You know, the zero-day bug protocols being exploited across all of the corporations and entities and governments everywhere. So that makes you want to go, okay, let's keep these people out of our system and close it out a bit. What happens if they do destroy our supply chains in certain ways? So we need to get our supply chains home. Now, Trump span it as, well, we want to build our manufacturing back in America, make America great again. Well, you're never going to employ jobs. You're never going to create jobs, really, because you're going to build robot factories. So that's what, technology trumps that. But the supply chain issue means, what does the US best do? It's best to team up with Canada and Mexico, and that gives it pretty much most of its needs. And maybe if it could ever make peace with South America, it would have any of the rest of its food, but it competes on the global food stage, agriculture stage. So they're not kind of friends at the best of times. But Mexico, the US and Canada, which is NAFTA, kind of works. The European Union, for all its flaws, does kind of work. European Union's reliance on Russian oil and gas or Algerian oil and gas, big problem, because you can now be held ransom. People didn't want to believe that could happen, and now it's happening. Because how do you run NATO if you've got no oil and gas? How do you fly planes, right? So that's the big realization. China has its own objectives, and it cannot be held beholden to others. It's already been doing this on its own. It's been the accelerant, because it has gone around Africa basically swapping credit for resources. And that's the one belt, one road policy. People judge it as not successful yet, but in the geopolitical terms, it's probably going to be very successful. There's a lot of imported workers from Jamaica, Philippines, India, and if you continue to raise prices on them, the cost of living here is quite high for them already, so it's quite hard, and a lot of them send money home. So what happens is, if you raise prices and you can't raise wages, then crime explodes, because people want to make ends meet. This kind of thing is how it manifests itself in ways that people don't forecast, because everyone says the Middle East. But it means that robberies in my street are going to go up, because in desperate times, people take desperate measures. People don't want to be criminals, but sometimes they get forced by the circumstances that dealt with it.
And so
now, we didn't have that in the pandemic, because basically a lot of people left because there were no jobs, and then if they don't have a work permit, they have to leave. So we saw a massive population shrinkage over that period of time, and governments then gave handouts. So you kind of alleviated that, which is one of the reasons I think we're going to end up seeing government handouts, because you're destroying the middle and lower classes by this, because the wages will not go up as much as the prices. Now, I don't think the price rises are permanent, so I think inflation unwinds itself somewhat from demographic factors and other factors. But, if we break supply chains yet again with China, okay, we're in a different world. That's a world I don't yet know how to forecast.
As crypto asset values continue to tumble, the The former Goldman Sachs executive explains why he believes the market is on the cusp of recovering, despite the fact that crypto is in full panic mode. Over the last 24 hours, approximately $300 million in long and short positions have been liquidated across the cryptocurrency market. Many analysts wonder if Bitcoin adoption will overcome market volatility. What do you think about Raoul Pal's prediction for Bitcoin? Comment down below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.